Yes. The money flow. It's the flow of the market. And much like the ocean, money flows in and money flows out. And at times, it can seem like chaos. But out of that chaos, what if you could see? There's an old saying. It's hard to see the forest from the trees. Meaning we have to get above the treetop to see the big picture. And seeing the big picture is what the money flow trading system is all about. I've traveled America to talk with other people who love trading as much as I do. One of the great things about trading is that it can be done from anywhere, any location on earth. You don't need fancy equipment. You don't need 5 or 6 computer monitors. You could do it with a phone. You don't need a college degree. You don't need a suit. You don't need to understand complicated technical jargon. But you will need a desire to win, a desire to be successful. And sometimes you just need a little help. And I believe that I can help you. I've helped thousands of people all over the world get a better understanding of the stock market, improve their trading, and build more confidence. All right, man. All right, enough of that shit. Let's check in on the S&P 500. Holding the anchor point this morning.
And so is that always bad, the expansion of the money supply?
Hold on. We got some rogue videos. This morning on Instagram, I was talking about trying to spot a bottom. And so I did a little 20-minute live talking about spotting bottoms. What we're really concerned with is where's the close today. And right now it's at 409.90. Our big problem here is that the RSI is not extreme. So hopefully into the close, we're going to hold this anchor point. It's super important. Because if that breaks, it's down for a minute. It's down, man. Chapter 10 of the Science of Getting Rich is entitled Further Use of the Will. Further Use of the Will. You cannot retain a true and clear vision of wealth if you are constantly turning your attention to opposing pictures, whether they be external or imaginary. And I have to work on this too, man. That's why I'm reading it. I'm reading it to me. Do not tell of your past troubles or financial nature. If you've had them, do not think on them at all. Do not tell of the poverty of your parents or the hardships of your early life. Do not do any of these things. To do so is to mentally class yourself with the poor for the time being, and it will certainly check the movement of things in your direction. Let the dead bury their dead, said Jesus. Put poverty and all things that pertain to poverty completely behind you. That's the word today, chapter 10, Science of Getting Rich. It's a great book, man. I got a free link in the report. I think at my website link too. GeraldPeters.info. I think if you scroll to the bottom, there's a link to it. It's free. I'm sure you can find it online. You can order it on Amazon, all that good shit. So this is where we're at. I'm trimming 2 winners today. Just a little bit. Kellogg's bang that RSI at $73 there. And it already hit it here. These stocks are trading overvalued right now. But that's all right. I mean, they're getting a premium. That's cool. And you can see the little money flow patterns in here, right? You see them where they run up. And this is funny to watch. Look where this anchor point was here. It's basically where it stopped before, right? To me, that's previous resistance becomes support. So on the way down, that's what we anticipate. And let's say that one broke right there. Well, I just kind of assume it's going to go to the next one, which is pretty sternly right around in here, right around in this zone here. If that was to break, that's where I'd assume it would go. And it would stay, in the pattern. And so because I own this stock, it's Kellogg's is one of the stocks that I own all the time. I want to add on stage ones and I want to trim stage threes, especially if it's overvalued. And that's what we're seeing. I wish my position was larger. This is one we started adding toward the end of last year because it was not doing well. So if you back it up, you can see the stage ones from here. Right? These would be stage ones. Maybe over here too. And sticks to the model that over time, stocks go up with moments of straight down, right? So you have moments of straight down. You see that with this stock, with Kellogg's. And now it's doing up. Well, let's check another one. Campbell's. Trimming this one. When it hit 49.50, the RSI went 70. I took a little off. A little quick to do it. Probably should have waited a minute, but they're trading above value. So these stocks are overvalued, and there's a lot of other good stocks that are trading undervalued right now. Campbell's is not a growth stock, okay? If we go into recession, will this stock do well? Probably so, and it plays a dividend. But we wanted to buy the dividend when it was cheaper, not higher, right? So by owning different assets that you purchase when they were on sale, when things get wonky, some shit goes up, man. And, are you always going to be ahead or beating? No, not necessarily, but sometimes you are. And while this isn't a short position, it's kind of nice to have, 10, 20,000 going this way in a Campbell soup, in a General Mills, in a Kellogg's that you bought a year ago, 2 years ago. Slow moving stocks. But guess what? That took 2 fucking years to materialize, And so you had a lot of time to add to this thing. And now it's running. And as you build this out, you're going to have different ones that, get hot at. Remember when steel stocks were running and we were trimming? If you remember, we trimmed into these. Not a lot. Not a lot, man. I just want to peel some off. Because I don't want to get out of the trade. I own this. It pays a nice dividend. But the higher this goes, understand, the lower the return, not price appreciation, the lower the yield return. So as I'm looking at, let's say a portfolio of 40, 50, 60, I got friends that got 70, 80, 90. I don't know, maybe that sounds crazy to you. But how much do you need to look at Pepsi? And I get it, if you just started, that seems like a lot. But to someone that's been investing for 20, 30 years, the fact they own some Coke and they've owned it forever and they don't really make a lot of decisions about it, they just own it, it doesn't take up a lot of space in their brain. If you're just getting going, it's taking up a lot of space in your brain. And so a lot of times when you're like that and you've been investing consistently and you've had some big winners and you've trimmed them, and the big winners, and you've trimmed and you've added and you've bought and you spread it out, every big sell-off in and of itself isn't that big a deal the more that you're spread out and diversified over time. It doesn't feel good. I don't like watching a steel stock that was just 185 fall to 136. I don't like that. But I did like buying it up, these stage ones. And if we go back, let me see if I can pull it up. What was the first time I paid for? I've owned Nucor Steel a long time. Let's back it up. Through a lot of ups and downs. Let's see. COVID crashes. 2008, the 2015 sell-off. Let's see. All right, so let me see if I can bring this over. Nucor Steel. Let's just find some 215s. Purchase 10 shares. What price? $48 in 2000. No, $41 in 2015. Okay. Now, how much is that? That was 13 shares, man. Those 13 shares are up 222%. Even though the stock has pulled back from 185 to 130 something, I'm up 220%. Because it's pulling back, do I need to do anything? No. I don't need to. What do I need to do? But as you go down, look, they're different. Look, these are different. Now, these are dividend payments. Bang, 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 bang. So these dividend, look, because why? Well, if you own it for a year or 2 years when the price is low and you're accumulating on stage ones before it runs, this is where you start to get paid back on that, man. So now, could that help you be a trader? Fuck, I think so. If you're in this stock all the time over in your trading account, maybe you take breakouts as a swing trade, right? So in your buy and hold, you own this. There's the breakout. You set your target. Boom, you take your money. You got 2 different accounts, 2 different objectives, 2 different business models, both following basically the money flow strategy with different ideas, different targets. One has stops, one doesn't. One's an accumulation, one's a swing trade or a catch. But that's how deep you want to go in it, man. You may not have time for that. Maybe you're busy. You're doing other shit. Like if you can make money, doing whatever, and that's going to make you more money, then you do that, man. Sometimes people can get themselves sidetracked trying to, they give up more money to make less money because they think it's somehow different, better money. Do I want to buy this right now, knowing what I know with the money flow? No. Where's it likely to stop? At boxes. There's a box. It tried to stop. There's a box. It'll probably stop. There'll be another one here, right? All the way down to here. And these levels, and as it does it, it's going to draw the money flow. Sideways, up, sideways, down, then down, right? Well, on the way down, well, guess what? On the way up, it wasn't a straight line, right? It ran up, pulled back, ran up, pulled back, ran up. Oh, and then what? Started topping out, right? Down, down. Oh, wait. Then we broke, right? And then same thing. Goes down, then back up, and then down, and then back up, and then down, and back, right? And it builds out this pricing model, man. So let's see. Let's check on 3M. Is 3M undervalued? Let's do a quick and dirty. Not really, according to tip ranks. What about Morningstar? You notice I didn't add to it yet. Now, 3M can trade at a premium. Morningstar says 20% discount. So we got a little controversy here. Now, this is where you could add your own intelligence. Go read. We could use technicals. This is a stage 1. It's below the 200. We got that going for us. We got a split between analysts. What if the other analysts come along and start agreeing with Morningstar and the market turns? It's probably going to rip, right? So then we could go look and say, okay, let me pull this back over here. Let's see. What's the dividend yield on 3M? 3.99. So 4%. 4%. What is the dividend yield on Kellogg's that I just sold or trimmed? 3%. Actually, 3.3. So we're getting almost a full bump in yield. Just a little. This one transaction. And in the video today on Instagram, I said one day doesn't mean a lot, but one day can mean a lot. It's not one day, it's an accumulation of days. It's not one trim, it's an accumulation of trim. It's not one roll-in trim forward, it's rolling 10 profit-taking trims forward into a better deal with more upside that pays a higher dividend, right? So if I look at, what's this thing doing? If I look at a stock like, what do we think MFA's worth? This is a mortgage REIT. They're on a stage 2. 22% upside. So the stock I just trimmed, which was Campbell's, they say is overvalued by 4%. What do they say over at Morningstar? Campbell's soup, baby. Talk to me about the soup. Oh, they say it's fairly valued. So all the analysts seem to think that Campbell's soup is trading at about fair value. All right. And if we look at the money flow, where's it at? Looks like a stage 3. RSI is extreme, right? And anchor point, we talked about this today on Full Auto Boot Camp count, right? Full Auto 1-1 Boot Camp on my live, that I was trying to show a video how to find the bottom. We want to spot the bottom. You need to be able to spot this bottom. You can spot every bottom. You're like, but it wasn't the bottom. Well, get the next one. That is a bottom. You can spot it, because if you're tracking it every day and logging the anchor day and then waiting for 4 days to move sideways and then price to get above the 5, you tagged the bottom. You wrote it down. Well, if you hold to that and you buy on all of those, right, be over here, you would end up buying a series of bottoms. And over here, you'd say, but it wasn't the bottom because it's starting to go up and then it came back down. I know. Get that one too. Because over time, we're not playing for that. We're playing for true value. What is true value of this stock? $46. And Morningstar says it's fairly valued. Now, what is going to take Campbell's to the stratosphere? Campbell's to the moon. Campbell's to the moon, baby. Does that sound like that might happen? Maybe. I don't know. We've seen a lot of crazy shit. Kellogg's to the moon. Look at Kellogg's. I don't know. But I know I need to pay myself, so I need to start trimming some. And what could I do with that? Put it in something else. What's breaking out right now? AG&C. Everybody's worried about DraftKings. AG&C's going up. It's going up, man. Right? We put in a pivot point, pays a dividend. At one point, it was like 13, 14%. What's the dividend on AG&C? Pays monthly, by the way. Remember I was saying I was trying to get me 1,000 shares. I hit my 1,000. That'd be $120 a month. And you say, well, that's not a lot. Times 5 years. That's a chunk of money. Maybe I just set it aside. Just let it bang the account. I don't know. Do what you want to do. But where was our pivot? Right here. Now, remember, if price goes below the pivot and back up, as long as it goes back up, it's still above the pivot, man. Okay? We can get technical with that, and you can get all in the weeds, but ultimately what we're trying to build here is a box. Okay? It's a box. And then it moved fast above it, now it's breaking out. Likely to get stuck up in here, right? So if I'm trying to buy income, I want to buy these stage 1s, right? Shit, I'll buy this one up here too. You say, why? I'm trying to get dividends, man. I want to buy lows. That's what I'm trying to do. Would I buy this? No, that ain't no good. I want to buy extremes, man. I want to buy extremes, catch the anchor point, wait for the stage 1 setup, and then start allocating my money. Could you do it other times? Of course you could. But what I'm saying is, as I'm watching 40, 50, 60 things, I get 3, 4, 5, 6 perfect signals a day. I don't have to fuck around with it. I can get perfect ones. This is a perfect stage 1. Add a little there. Next day, this is a perfect stage 1. Add a little. You say, what if I don't have any money? Don't add. Go look and see. Can I trim something? Oh, look, I could trim Campbell's. I could trim Kellogg's and add that to what? Okay, well, we can look. What could I add it to? Let's see. Where's the Qs? Oof, Qs broke support. So let's look at, what is it? What is this stock? Man, it's Friday, man. Let's see. Everybody's like, I hate stocks. It's Friday and I hate stocks. Stocks are down. I hate them. So since I posted that video on YouTube the other day on the GLV, so far we're up 5%. I bought 1,000 shares, so I'm up $441. And they have a dividend of what? 12.5%. So that'll be 9.5 cents. 0.06. So that'd be about $98 a month. All right. Got a little cash flow now. Now what do? We just let it play out, right? So what do? Well, let's say I want to own this for the next 10, 15, 20 years, man. I want to collect this money, right? Once this thing starts to run, is not that interesting to me. Right? What's another one of these? There's another one I've been eyeing. I want to buy some of these because they're on sale. I put this out today to the Money Flow gang, Liberty All-Star Equity Fund, and I said your homework was to go read. I know you know how. Go read the fact sheet. I posted it in Discord. Now, you don't have to run out and buy this, but at least go look at it and read the fact sheet, man. I'm going to pull it up, man. This is good for you. Hold on, I'm pulling it up, man. Now, this thing, now you may go read these and you're like, man, I don't like those. That's fair enough, man. You don't have to like them. I like them when they're on sale. This one's not on a big sale, but it typically trades at a premium. It's got a pretty decent cost to it. Its goal, what it's trying to do, is to return 10% a year in the form of a quarterly distribution. Now that could go up or down, so this is the risk we're taking. But if we get inside here, inside the fact sheet, you can see a little more on it, right? You can read on the investment approach. You can see what they own, right? You can see the stuff they own. And you notice it's a diverse thing. They got real estate, they got utilities, they got staples, they got energy, materials, communication services, consumer discretionary, healthcare, financial. Now notice they're a little heavily weighted in technology, financials, and healthcare. So what is that causing? That's causing that push down, you see. Because they own probably like Microsoft, Google, shit like that, and it's pushing it down, man. Well, that's all right. The money is coming from the shares. So as long as the underlying assets don't cut their dividends, the bonds they own, the REITs they own, the whatever, this price doesn't fucking matter. What matters is the distribution continues to come. As it goes lower, I actually get more for my money because their distribution doesn't change unless you see something that's going to cause the distribution to change. Now, if the distribution changes, then that would be a different conversation. We'll turn that off. We'll turn off that. I got a new camera coming. I've just been fucking with it to learn how to use it. So in sell-offs, these are the time, you want to get one or two penny stocks that you're eyeing. Don't go crazy with that. You definitely need a couple growth stocks. Yeah, you got a bunch of maybe, but you really need to have one or two that you're really eyeing, a Lyft, an Uber, or whatever, a Palantir, or whatever, right? And then, there's other things too, man. REITs were just on sale. Well, they're headed up, so I'm not putting any attention on REITs right now. They're breaking out. Look. MFA I own two. This one I could still add to, and today I did add to it. Sent out a text message I was adding to MFA. MFA is undervalued. Pays at 9% dividend yield. So if I could trim a little bit of Campbell's or a little bit of Kellogg's and add to this, I just increased my dividend yield on that little money by what? A chunk, man. It went from 3% to fucking 8%. That's a big bump, right? So that's rolling money forward using the pattern. And if we look at this, you say, what's the pattern? Sideways, right? Up, down. There's our anchor point. There's our first stage one, right? Now what? We're moving higher. What do they say it's worth? $22, which is up there. Meaning I'll just keep playing the game with it, building my position reasonably. But when it gets up here, like Campbell's did, if these things get back to normal or get back to true value, run up, if they catch fire, they will. At some point, these will be the new hot things. And as long as I didn't fuck around and sell it, but I accumulated shares, guess what? When it runs up, I get to celebrate on that, right? I know, it's a difficult conversation, man. Look at Ford. Look how low that went. $4. So the guy up here that loved Ford at 26. I mean, look at that stage one, man. All these stage ones. So if a guy said, what do you think of Ford? I like stage ones. What do you think of Ford? So if we're watching Ford, what do they say? 40% discount. It's got a dividend. But most people like it higher. They don't like it lower. And you say, what do you mean? Meaning they don't want Ford at $4. Ford at $4 makes them sick, man. They want Ford at $25. They want to pay $30 and then have it hang out at $25. They don't want to pay $4 if they ever owned it at $8. That would be a 50% drop, Gerald. That'd be fucking crazy. Or would it? We go through 100 of these. That's my mission on earth, to get that across to people. It's so difficult, man. Everybody intellectually agrees until it happens to them. Oh, I'm against guns. Until you get fucking robbed, then you wish you had a gun. Everybody's for it, right? Everybody's for it. Oh, we need to ban the police. Until you need them, then you're for them. That's how a lot of people are, man. They want high prices. They just don't want the low prices to get to the high prices. Low prices were the opportunity. Was it? Was it? So, I don't know, man. Let's look at, where's Netflix? Ooh, look at Netflix going down. Let's back up Netflix a second. Look at this fall from Netflix. It doesn't do it. And you say, has this ever done this before? Yeah. Look, it was almost $50 and it fell to $7. Is that 7? Oh, catastrophic fall. Look, to $6 and something. That's where you'd have sold it. That's where most people would sell it, right there. What year was that? 2013. So from 2011 to 2013, Netflix goes from $50 to $7. It's the worst we've ever seen. We'll never recover, Gerald. It'll never recover. Never. See it? So we could put a whole bunch of stocks in here. You're going to see this catastrophic move in growth stocks. I know. Let's see. Let's see, which one is this? This is Intel. Doesn't look as bad on Intel because Intel doesn't move that much. So look, that's around what, $32, and it fell. This is same year time frame, 2015. Now it went up for a while and then came down, right? And it fell to what, $20. And over here we see $22.50, and it fell to what, $15. Not too far. And then here's another one over here. So Intel's done this a few times, right? It's not a big deal. It's done it before. Let's see. Oh, what about Walmart? I know that thing's been smashed a few times. But Gerald, how can we do, what do we do with this? Remember when Walmart in 2015, those were the heydays. You guys weren't trading. I owned a lot of shit. Look at this. Nice build, 2-year build up. This is a monthly chart, guys. Runs up, back, runs up, back, runs up, back. 2 years here after a big run up, right? Only to fall from, what was that? Almost $80 down to, what is that? $50. So was that a 40% decline? 40% decline. Look at this. Previous high. I bet they touch. That shit is crazy. Close. Very close. My point is, it's pretty common. And so you have to ask yourself, and I this is me talking to me. Oh, look at Walmart. Catastrophic pullback. Oh my God. Look at its pullback right now. So we got to ask ourselves, how are we going to prosper from this? If Walmart comes down to about 130, do you have a plan right now? So the way you watch Walmart is like, good. It's probably going to come down into here, right? That would be the money flow. Sideways up, sideways down, sideways. So would we want to buy it today? No. Remember my guy yesterday? I made a pledge. I only buy on down days. All right, you going to buy here? Well, it goes down again. And again, and again, and again. Why don't you just wait and catch the bottom, man? And you say, how could you know the bottom? It's pretty easy. You just got to find the anchor point. That's what I was saying. Find the anchor point. Once you find the anchor point and you have the 5-day moving average and the RSI is extreme, and then the MACD turns and it starts to go sideways, you can go, okay, cool, I got an anchor, possibly a bottom. Let's buy this if it's undervalued, right? What if it's not? Then no, I guess. Let's see. Where's YouTube, man? Hold on, YouTube. Just loaded up on AG&C. Doug says he was on AG&C the other day. Please bring forward. Probably will not come back to $4. I'd be highly shocked. It could. Anything's possible in this market. Someone texted me this morning, thought DraftKings went to $1.30 or something. I was like, no, they're restructured. It'll take a minute for your account to reflect it correctly. Thank you, Doug. So if Walmart's coming down, I'm going to say Target's coming down. Yep. Target's under the 200. So what if you own a bunch of Walmart? You own a bunch already. But you don't own any Target. Now's when you're like, fuck, I think I'm going to pick up some Target. And you come over here and you're like, all right, let's see which one's undervalued the most. Is it Walmart? Which they say 152, it's fairly valued. So they don't think Walmart's cheap. Let's check Target. Oh shit, they don't think Target's cheap either. They think it's trading at a premium. All right, so maybe that's not a place to look for any money, man, in the future. Maybe, but maybe not. Maybe we got to keep that in mind. Check Tip Ranks. Tip Ranks says it's 12% for Walmart to the upside. Let's check Target. That surprised me. Wow, we got some real discrepancy here between. That's interesting. That you see that you notice that, right? Like if they really disagree, why? We need to go see why that is. And that'll give you some homework, you know? I mean, like if you're trying to figure out on these stocks why. So what I'm usually trying to do is balance, not perfectly. Let me see if I can find an example. I don't need them to be perfectly balanced, but I do want it to be somewhat balanced. And it's usually going to be balanced by time. This is just one account. But if you notice on Southern here, well, part of the thing with it's one of my oldest holdings. Southern, Pepsi, BX, Chevron, MO, McDonald's, Hanes Brands, Verizon, Walmart. A lot of these go in order of when I started buying them years ago. And because I've added to them for years and years, 1, 2 shares. Back in the day, I would do 5 or 10 shares because I paid $30 a transaction. And then it was $9 a transaction. Well, shit, if you're doing 3 buys, that's $30 fucking dollars. That starts to add up. If you're the kind of guy like myself that buys 2 or 3 times a week, multiply that times a year. One year I had $7,400 in commissions. So that can add up. But now there is no commission. So shit, we could buy 1 share of Walmart, 1 share of Target, 1 share of this or 1 share of that. And now throw in partials. You could bang every stage one, just $20, $20, $20. I mean, so it's pretty wild how the game has opened up. And a Money Flow member sent me a thing today. She was reading the book and it talked about like $100 commissions. Like you paid a lot, man. So we are blessed. With that blessing, it moves fast though, man. Information moves fast. Don't get shooken out. Get your buckets right, man. If you're making money, give it time and let it settle down. Don't try to force it up yourself. If you got debt and the stock market's freaking you out, stop looking, focus on your debt, and then come back to it. Some people don't like to add to a stock and then see it go lower. That fucks with their mind. I kind of need it to go lower. I'm planning on not retiring for a while. So I'd like to have more money, which means the lower my dividends can buy me more shares. If I can get more shares, I can get more dividends. And if I can just stay with that strategy for the next 9 years, continuing to accumulate stage ones, not selling, and just keep pushing and pushing and pushing, there's no reason I couldn't get to millions of dollars in there and have fun doing it, right? And enjoy it and watch it and so that when I am older and old, I can make logical decisions and not be freaked out by Fox News and selling all my shit because of somebody that just became president. I want to be able to have some kind of control over. That's what the money flow is trying to do. Give you control over your own things that you can, even if you're not buying the bottom, you basically get it on how to buy bottoms. Okay. And once you can spot a stage one, if you look at this, doesn't this look like the money flow pattern? Right? Up, over, down, right? Now, what if you bought that one? Listen to me. And then it came down and I'm like, well, buy that one. Right? And then it came in, yeah, well, buy that one too. Those were all 3-1, right? And then it starts to drift up. Well, fuck, up here, you don't care that happened. And so time times amount times yield is our friend. Time is our friend, man. And, if you're trading, then obviously you got to shorten that. You got to use stops. That's a whole different conversation. But picking up these assets, that's what I'm talking about here is assets, then time is your friend. Downdrafts are your friend. Recessions become your friend. The only hard part is typically when those come, people have a hard time. They don't have the money. So that's where our buckets come in. I won't hold you guys, man. Happy Friday. I hope you have a good weekend. And if you haven't noticed, I'm using my Full Auto 1-1 Bootcamp account. Instagram froze my other account, said that I was pretending to be Gerald Peters. So, and then they left up the fake accounts that are actually pretending to be me. I've appealed it. Not much else I can do. I was a little surprised by some of the insensitive comments that I got from people. Like they thought it was funny. I don't know why they think me losing 3 years of my life's work was funny to them. At some of the stupid comments I got, I was surprised. It really was surprising. I also got some good ones, but I got a lot of them that, man, it's like, wow, you really don't get what I do you? So, be like you losing your job, and then I'm like, that's funny. That wouldn't be cool, right? People do that, man. Anyway, you guys be good.